Our top story this half an hour, British Prime Minister Theresa May facing likely defeat on her deal for Britain to exit the European Union. Joining us right now is the president and founder of the Eurasia Group, Ian Bremmer. Ian, it's good to see you this morning.
Happy to be there.
Your reaction to, and expectation rather, to the happenings in Britain.
Well, look, you're right that this vote is likely to go down. It's a very unpopular deal, and very few in her own party or the Labour Party are happy with it. Some because they think it doesn't go far enough, some they think it goes too far in terms of separation. When that happens, there's a decent chance that the Labour Party declares a no-confidence vote, which everybody then votes on in Parliament, which Theresa May is likely to succeed in pushing that down. Which, in other words, we're kind of back in a couple of days to where we are right now, but we're a little closer to the precipice. We aren't close enough.
Yeah.
It's not urgent. It's not a crisis.
What's your take on the whole Eurozone? Matt made a point earlier. I mean, the fact that we're looking at a slowdown, I mean, we went from the beginning of last year talking about synchronized growth across the world. Now we're talking about a synchronized slowdown, by the way. Okay, so you look at Europe. You've got the Britain uncertainty. You've got fires and protesters in Paris and throughout France. You've got Italy and budget issues. What does the Europe story mean to the U.S.?
It's true that Macron's approval ratings are 23% right now, and yet he has significant executive power, and you're not going to toss him out. He's not going anywhere. Merkel had to resign from chairmanship of her party, but she was also able to hand-select who her successor is going to be. The Italians are being run by a five-star movement league government, which is very anti-establishment, but they ultimately had to back down and create a budgetary compromise with Brussels. So on the one hand, all of the trends are kind of slow motion negative, but just like Brexit, there's no urgency here.
Yeah, but
there's
Matt,
no crisis
remember for years
here.
We were saying, are we coupled or are we decoupled? I mean, it's pretty much the situation that what happens in Europe is going to affect the U.S.
Yes.
We're coupled.
Yeah, but I think what Ian said is interesting, which I want to follow up on, which is that sense of urgency. Europe keeps sort of tiptoeing to the edge, never quite getting there. And what's interesting in Brexit is you've got a situation in the UK where nobody's happy with Theresa May, nobody's happy with the deal, nobody's stepping forward to seize the crown, everybody's sitting back to watch. There's even a chance, I suppose, that this could be extended further than the March deadline, and they keep going and keep going.
Easily.
But what ultimately breaks in your estimation, Ian? If you had to bet, where do you think this goes? Does Labour end up taking power here? Does someone else in the Tory party step forward and take the crown? What do you think breaks this logjam?
Think back on the Brexit negotiations when the Greeks were being pushed right up against the edge. And the way that got resolved is that the last day, the Germans basically said, here's the best deal we're going to give you, and you're going to take it, or you're going to be out and you're going to get crushed. And the Greeks had their referendum, and they ended up saying, we're staying in, right? Now, we need to get to that razor point. We need to get to that cliff edge where the Brits finally say we're in or we're out. And by the way, that means a larger chance of a no-deal exit, which would be devastating for the British economy, but it also means a much more likelihood that the Brits, the Conservatives, stand up for Theresa May, get the deal done, and then move on with another election. The point is we're not close to that right now, and I think that because the Europeans themselves are seeing that the likelihood of a hard exit would be problematic for them too, and the numbers are looking worse and worse, they are more willing to extend if the Brits come and say we need more time to try to come to yet another deal.
Right, and then there's China, Steve. This has been an important issue. Let's talk China for a moment because it's got so many legs. Asian markets higher overnight. China signaled it will support its struggling economy. They're talking about tax cuts in China and implementing them. This coming after Apple certainly blamed part of the revenue shortfall on weakness in China, Steve.
Yeah, a couple of months ago, China started to reduce some tariffs on non-American products. Do you think there's going to be a big trade deal? There's starting to be rumblings that natural gas and other things are going to be included, and they'll separate intellectual property for another day, but come up with a big number that everyone can proclaim. Great big deal. Instead of the $70 billion you had with Mnuchin and the Chinese a few months ago, this will be hundreds of billions over 10 years. Do you see that prospect?
Yeah, I think the headline numbers are going to be significant. I would be stunned if we get to the March 1 deadline deadline, and Trump says, that's it, we failed, and we're going to 25% tariffs. Nothing.
But both sides need a deal.
Both sides need a deal. Trump said that dinner at the G20 in Buenos Aires with Xi Jinping was fantastic. Both sides extended negotiations by another day last week.
Yeah.
That was significant. Now, to your point, Steve, I don't believe that the headline deal means that the Chinese are going to start respecting our intellectual property, or that we're not going to have problems with the South China Sea, any more than I think that the framework agreement in Singapore with Kim Jong-un meant they were about to denuclearize.
Why in the hell did we start the fight then? Why in the hell did the United States start the fight unless we're going to get intellectual property protection? That's the whole issue.
Well, like, why did we start the NAFTA fight if we were going to end up with a deal that looks 98% like the old
President
NAFTA?
likes tariffs. He says that they work. Yeah. He says that they've brought in $11 billion in revenue already.
I've said it's just like the chicken tax from the 1960s, the 25% import tariff.
I'm old enough to remember
on
that.
light trucks.
I'm not.
It's still around.
No, but Dagan,
so
you're right. It's still around. It's still around. But Dagan, your point is important because, of course, there are a lot of hawks in the administration around Trump on China. And by the way, the corporate community is increasingly hawkish because they feel like they're getting their faces ripped off by the Chinese, and it's a much more difficult, unsustainable environment. And so I do think that even though the headlines coming out the next couple months on U.S.-China are going to be quite positive, and the markets will respond well to that, structurally, I don't think we're going to be resolving the big issues you're talking about. But throughout all of this, the Chinese
economy has slowed, and the Wall Street Journal this morning is asking, who's next, right, Matt? Weakness in China exports fueling worry over earnings.
I mean, any consumer-exposed business, Starbucks or Nike or two that we talk about, like Apple, might face some slowdown threats there, I suppose. As you say, I think the corporate sector has gotten a lot more animated about China.
Absolutely. Although I think Apple has a bigger problem because they say, well, we're the ones protecting your data, and the China's saying, well, why would we want to support that? Right? I mean, Apple has a model that doesn't actually work for China long term, especially as they start growing.
The premium pricing, the Chinese cell phone makers are the ones coming up with very competitive, much cheaper
Huawei
products.
doing that. They've got Huawei doing that.
Ian, what's your read, though, on Chinese leadership? You definitely get the sense that whatever else has happened, the tariffs have impacted the economy more than they expected, and Trump has demonstrated some fairly strong anti-China feeling with countries and companies around the world. Is that penetrating? Is that going to change any of the way that they act going forward on the other side of a deal?
I think that Xi Jinping miscalculated, not only thinking that Trump was perhaps more of an opportunity for him. He's like, oh, I can do a deal with this guy. He's not going to talk about human rights. That's fine. Like, okay, we'll work him out. But also thinking that the Chinese really believed that they could get a whole bunch of American allies on their side. Because Trump's America first. Trump's saying, maybe I even want to leave NATO. He's going to beat on the Europeans. China's like, hey, we can be a good guy with everyone. Remember, they went to Davos and Xi Jinping gave that big speech. They will do free trade. Well, it turns out the Europeans and the Japanese may not like Trump personally, but they're a hell of a lot closer to the United States than they are to the Chinese. And that reaction against them, especially on things like big technology, Xi Jinping has had to back away from. And that's also driving Xi Jinping to say, maybe we need to go a little more softly in response to what Trump is saying right now.
All right, we will leave it there. Check out the Eurasia Group's top risks for 2019 with Ian Bremmer. Ian, great to see you.
Good to see you guys.
Thank you so much.